class. In my last videos, we shall discuss about the theoretical concept of the chapter Dissolution of Partnership Form. In my first video, we have to discuss about what is meant by dissolution, in which circumstances we have to dissolve the firm, and also we have to discuss that what is the difference between dissolution of partnership and dissolution of partnership firm. And also in the last video we had discussed about the format of dissolution of partnership firm, how the accounts will be closed and which are the accounts we have to prepare at the time of dissolution of partnership firm. So in that we have to prepare majorly 3 accounts. These accounts which are prepared only at the time of dissolution only. So under that the first account is realization account. So in this account we have to record the realizable assets and payments of liabilities, and finally we have to know about the profit or loss on realization. After preparation of the realization account, the second concept we have to prepare partners capital account. In this partners capital account, why we have to prepare means to know the settlement or external payments dues to the particular partner. So we have to prepare partners capital account, and finally we have to prepare cash or bank account. So what are the properties we have, how much of cash or bank balance we have, and finally how much of the liabilities we have to pay at the time of closing the company. So for this we have to prepare the format also in my previous video. But in this class we have to discuss about the while transferring the assets and liabilities. So here some journal entries will be arises. So this will belongs to 2 months topic. So out of these entries, any one entry they will be asked in the examination, or they will ask 2 entries in the examination because of due to the reduction of the syllabus. So now come to discuss. Next we have to discuss about our topic accounting entries for dissolution of partnership firm. In case of partnership firm, the firm will be dissolved. During that time, some entries they are going to be arises. Some journal entries we have to know. So how the entries will be there, and how we have to write the entry, why we have to record it debited, why we have to record it credited. So everything we have to discuss in this video only. So now that the first entry is for transfer of realizable assets at book value. For transfer of assets, realizable assets at book value. So if the assets will be transferable at book value, so in the dissolution of partnership firm, during that time, how we have to write the journal entry for this sentence? So for transfer of realizable assets. So already I explained that realizable or realization means selling or recording the books of accounts at book value at the time of dissolution of partnership firm. Here realizable is nothing but ready to sell the assets in the market. During that time, how the entry will be recorded? So here the journal entry is realization account data to realization account data to asset account. So for this we have to write the direction being being assets realized at book value. So here we have to write the entry like this: realization account debtor. What does it mean? That means if any assets has been realized, or we want to realize the asset in the chapter dissolution of partnership, so that asset we have to record it in the realization account debit side. So realization account debtor is nothing but we should record the asset of the book value under realization account debit side. To asset account, from where we have to record this asset, from where we have to get this asset means we have to get these assets under asset account. In the balance sheet, they are given right hand side of the balance sheet, or they are recorded the asset. So from there we have to transfer this value. The entire sentence means so realization account debtor, that means the assets we recorded realization account debit side, from we have to collect it from the asset account. So asset where it is available under the credit side, that means right hand side of the balance sheet, what it is available that we have to transfer here. So this is the exact meaning of this journal entry: realization account debtor to asset account. For this transaction we will give narration. So here narration is nothing but a brief explanation, a deep description about the entry. Why the entry we have to transfer? What is the entry? Being assets realized at book value, being what the assets the company will have that they are going to be sell in the market at book value, that we are recorded in the book value. That is the intention of the narration. For each and every journal entry, narration is common. Here the term being is common. Remaining the entry, if you have to write in a simple manner, you can write. Otherwise, instead of that, you have to write the same narration what is available in the entry. So that also you have to get the full marks. So this is the first transaction and first journal entry we have to arise. Next, let's come to the second journal entry related to the same transaction. For transfer of external liabilities, for transfer of external liabilities at book value. So this is the second journal entry. So if any external liability, so why we should consider the external liabilities in this sense means because it is the amount that we have to pay compulsorily at the time of winding up of the company. That is the ethical manner. The company law as well as the partnership act will say that if you want to close the company, you must and should, you have to repay or settle the liabilities what you brought for the business purpose. So for that purpose, it will be considered as an external liability. So for this, we have to write the entry: each liability account, data to realization account. Each liability account data to realization account. Narration being. So we will write here being. So just for one or two entries I will write the narration. Remaining entries you people only imagine and we have to write being liability, external liabilities. External liabilities transferred at book value. I have to write BV in the short form. You should write book value. So here, what does it mean? Each liability account data. So in case of the company, we have so many kind of liabilities. That is the long-term liabilities or short-term liabilities. Whatever the liabilities will be there, that we have to record it. Whether it may be creditors, whether it may be bills payable, whether it may be bank loan, whether it may be bank overdraft, whatever they have to given, we should write each liability liability side. While it will be converted into account, the left hand side will be considered as a debit side and the right hand side will be considered as a credit side. From where these values are recorded means each liability account data, liability data is available left hand side of the previous balance sheet. So the account data 2, where we have to record it, realization amount. 2 is nothing but credit side of the realization account. So actually why this one we have to record it means for transfer of external liability, for being external liability transferred at book value. We have to write the narration with a simple manner which give the proper meaning. We have to write very simply and we have to get the full meaning of this one also. So this is the second entry. For example, and next entry is for sale of assets. For if third journal entry for sale of asset, for sale of asset. In case of dissolution of partnership, the asset has been sold, whether it may be increased value or decreased value, that is not a matter here. If any asset has been sold, with how we have to write means we have to write the journal entry cash or bank account data to cash or bank account data to realization account, cash or bank account data to realization account. We will write the entry like this manner. So why we have to write cash or bank means when selling a any asset, we have to receive the cash or we are receiving the check. So here we have to write cash or bank account data. We are receiving the money from the cash basis or as well as the bank basis. How the asset, from where this value is recorded with, to realization account. In the realization account, credit side under step number 5. Already what the format we have to take, wrote. Under that we have to discuss. Step number 1, recorded the asset book value. Step number 2, recorded the assets in the liabilities under book value. And also step number 3, assets realized we have to write. Step number 4, liabilities settled or payment of liabilities we have to write. Step number 5, any assets taken over or sale we have to write. So sale we have to get under step number 3. So cash or bank account data to realization account. Realization account credit side we have to record it under the heading cash or bank account for sale of any asset. For this narration we have to write being assets sold or being assets realized. We have to write like this only. So as our will and wish, we have to write the narration also. This is about the third journal entry. Let's come to discuss about the fourth journal entry. Fourth journal for payment of liabilities. For payment of liabilities. For payment of liability. So it is quite opposite to the third journal entry, because so for asset sales is that, but it will come under the heading step number 3, assets realized. Realized is nothing but sold. So if we have to settle the liabilities, we have to payment the liabilities, it is compulsory we have to pay, whether they will be says in the question, whether they will not says in the question, even though we have to settle the liabilities, we will write for payment of liabilities. So if we have to pay this, we have to write the entry realization account. Realization account data to realization account data to cash or bank account. Realization account data to cash or bank account. So here we have to write like this only. So in the realization account, we will record the amount entry under debit side. What is the entry is to cash or bank account. Whenever we have to make the payment, we have to pay it on cash basis sometimes we have to pay on the check basis. During that time we have to write like this only. For payment of liabilities also we have to write the journal entry. So for this we have to write the narration. So narration I will write in the blackboard. You people who imagine, you have to write in your classwork itself. Narration being the payment of liabilities or being liabilities paid, like that you have to write. And next come to the entry number 5. For any asset taken over, for any asset taken over by a partner, for any asset taken over by a partner. So this is the journal transaction. So for this, how we have to make the journal entry? So this will come under step number 5 of the realization account. So in the step number 5 already we have to write that. So assets taken over by a particular partner means we have to write partner's capital account. So we will write by partner's capital account. By asset side, credit side we have to write. So this value we have to write. For this, partner's capital account data to realization account. Partner's capital account data to realization account. So here partner's capital account data, we will write the amount under partner's capital account debit side. So what is that amount? From where we have to receive this amount means to realization account. 2 is nothing but credit side. So credit side of realization account, we have to mention a particular term. So realization account under realization partner's capital account. So realization account credit side, what the balance amount will be there, that will be recorded in the debit side of the next partner's capital account. For this we have to create a journal entry, partner's capital account data to realization account. For this we will write a narration also. Narration being, so we have to write from here onwards, assets taken over by a partner. Which partner has been taken over means for their account we have to debit the value what we have to record it under realization account credit side. So have you got it? So like this we have to create the journal entry. Let's come to the 6th journal entry. It is obviously follows by the step number 6 only. For any liability taken over by a partner, if any partner has taken over by the liabilities means where we have to record it, it should be recorded under step number 6 of realization account debit side. It will become step number 1 debit side, step number 2 credit side, step number 3 again credit side, step number 4 debit side, and step number 5 it will come to the credit side, and step number 6 again it is transferred to the debit side only. For any liability has been taken over, if any liability has been taken over by a partner means during that time how we have to frame a journal entry means we have to write realization account data to partner capital account, partner's capital account, realization account data to partner's capital account. From if any liability has been taken over means that entire value we have to record it realization account debit side. What the value we have to record it in the debit side, the same value we have to credit it to the partner's capital account. So like this we have to frame the journal entry. For this we will write a narration. It will begins with being liabilities taken over by a partner. Which partner has been taken over means that partner name we have to mention it here. So step number 6 will be implemented, the 6th journal entry. Let's come to the one more journal entry for step number 7. payment of realization expenses. So we have to write here. So seventh journal entry for payment of realization expenses. Or we will call this one as a dissolution expenses for payment of realization expenses or dissolution expenses. When we have to come to know about the payment of realization expenses, sometimes expenses paid by the company, sometimes realization expenses paid by the partner only. So here, why the realization expenses is paid? Whenever we want to close the company means during that time it is a minimum amount which should we have to pay to the registrar of the companies to cancel our registration. So how if we want to start a company, then also we need certificate of incorporation. So that will be considered as a license. So if the company registered this, they will give the certificate of incorporation. So after that, it will be comes under the IT Act will be applicable. If we have to pay the run of the business, compulsory we have to pay the tax. Once if we want to close the company, then in that time it is compulsory we have to take the certificate of dissolution. Just for example, if we take loan from bank, means we are paying in EMIs, installment basis we have to pay. If once our loans will be settled, we will take NOC, non-objective certificate we have to take. During that time, it will be clear that we are not credited to any amount to the particular bank. We are not a creditor to the bank. So for like that only, if we want to close our company means we are not close the company as our will and wish. We follow some traditions, we follow some rules and regulations. So under that we have to pay the realization expenses to the register of company. So for this, if so here we will have two entries. If expenses paid by, which expenses this one? Realization expenses paid by company or partnership firm. If the company will be paid by the realization expenses, means during that time how we have to frame the journal entry, realization account data, to cash or bank account. Realization account data to cash or bank account. So where we have to record this value means under the heading step number 7 of realization account we will write cash or bank account. So realization account debit side we have to record the value. That value will be recorded again in the cash or bank account. To cash or bank account under the heading cash or bank account we have to record this one. For this narration is important being dissolution expenses or realization expenses paid by the company. Realization expenses paid by the company. So like this we have to frame the journal entries. If the expenses paid by the company. Suppose the same realization expenses paid by the partner. During that time how we have to frame the journal entry? So point B, expenses, here which expenses? Realization expenses paid by a partner. Expenses paid by the partner. If any realization expenses paid by the partner means during that time how we have to frame the journal entry? So here we have to write realization account data. Realization account data to partner capital account, realization account data to partner's capital account. So here also we have to write if the expenses paid by the partner means realization account data. So realization account under debit side we have to record it the value. So under the heading partner's capital account, and the same this amount we have to credited. To means credited. Which partner will pay the amount means for that their account we have to added the value. It will become the capital balance increases because the expenses paid by the partner on his own expenditure. So that entire credit will goes to that person. Which partner has been paid by the realization expenses, we have to credit the amount to the particular person account only. Realization on debit side we have to record it some value. The same value where we have to record it again means we have to transfer this value to the partner's capital account, which is who is paid by the dissolution expenses. For this we will write the narration being realization expenses. I will write short form realization expenses paid by the partner. Paid by the partner. So like this we have to write the journal entry under the heading if the dissolution expenses paid by the partner. So here for the payment of realization expenses, the payments will be having two modes. The first mode is payment paid by the company. The second mode is the payment paid by the partner. If the partner has paid means it won't come to the cash or bank account. Instead of that we have to use partner's capital account. There itself it is a settle. If it is paid by the company means it is a liabilities, we will consider as a liability, then it will come to the exact cash or bank account. Like this we have to frame the journal entry under the heading dissolution expenses payments. So next we have to discuss about some other journal entry for transfer of profit or loss on realization. In case in the step number 8 we have to know whether we have to get the profit and we have to get the losses. So step number 8 and 9 will always discuss about the profit on realization and loss on realization. If these two things will be arises in the business mean during that time how we have to frame the journal entries, that we have to consider this one. If for transfer of profit, we will write the entry for transfer of profit or loss, profit or loss on realization account. If in the realization account under step number 8 we will get profit, under step number 9 we will record it under loss. So these are two things which will not occur regularly. Sometimes they will be company will get the profit, sometimes the company will get the losses. Suppose if they will get profit, point A, if there is a profit, so during that time how we have to write the journal entry? So here we have to write, so this transaction if the company will get the profit means always it will come to the debit side of realization account. We will write the heading partners capital account. How many partners? All partners capital account. We have to record it. We will write the journal entry here, realization account. Where the value we have to record it? Realization account data. The right side of the realization account we will write. So the heading is to all partners capital, all partners capital account, realization account data to all partners capital account. We have to write like this. So for this we will write the relation also being. So we will write in the bracket being, so realization profit transfer to all partners capital account. We will write the journal entry like this manner only. When means if we have to incur any profit or realization. Suppose point B, if there is a loss, on realization. If there is a loss on realization, in some case, if we have to incur any loss in the realization account, means if we will get the loss, means always it is come under step number 9, that is credit side of realization account, that is right hand side of the account we have to record it. So we will write, how we have to write, means we will write like this manner. So all partners capital account debtor to realization account, So here, what is it means? We will write the credit side of all debit side of all partners capital account. So that we have to record the value from where this value we have to get made. So to realization account, that means credit side of realization account, we have to write the heading to partners by partners capital account. From the credit side of the realization account, we have to record the value debit side of the partners capital account. For this we have to write the relation being realization loss transfer to all partners capital account. We will write the relation between the brackets only. So like this we have to write the journal entries in case of there is a profit or there is a loss on realization account. This is entry number 8. Let's come to the entry number 9. So if for payment of reserve fund, reserve fund or general reserve. So for payment of general reserve or reserve fund in profit sharing ratio, how this value we have to transfer means in profit sharing ratio. If we distribute like this means we have to disclose the entire entries. So in case of the dissolution of partnership, sometimes the company has kept the reserve fund for future purpose. Sometimes the company has kept their profit in the name of general reserve. We can use the word for general purpose. In future we have to write general reserve. So if the company will having these two values or out of that any one value they have to maintain in the company, means that value we have to distribute it between the partners in their profit sharing ratio. Proportions will be there. So based on that proportions we have to distribute the entire profits as well as the losses. So how we have to distribute it with reserve fund or general reserve account, reserve fund account or general reserve account debtor to all partners capital account. To all partners capital account. We will write the amount to credit side of the all partners capital account. So which amount we have to record it means that is general reserve or reserve fund account what they have to maintain in the company. That amount we have to transfer to all the partners capital accounts only. So this like this we have to create a journal entry number 8 only. Suppose for 10th entry we have one more journal entry we have for payment of loan due to the partner. For payment of loan due to the partner. For payment of loan due to the partner. So suppose in the balance sheet some partners will take a loan. So beyond the partner any outsider means that will be considered as a liability. Partner itself has given a loan means that will not be considered as a liability. That is a payment at the time of winding up of the company we have to consider. So if any payment of loan due to the partner, if the company has due to a particular partner in the name of loan, during that time how the journal entry we have to write means partners loan account debtor, partners loan account debtor to partners loan account debtor to cash or bank account. Cash or bank account. So here we have recorded the value partners loan account debtor. This will be amount will be recorded debit side, that means left hand side of the previous balance sheet under the heading liabilities only. So A, B, C, three members are partner means if A has brought loan or give loan to the company means so A's loan account debtor to cash or bank account. This value we have to record it directly in the cash or bank account, not for the realization account, not for the partners capital account. When means if the loan due to partners. Other than partners, any outsider has been due to the loan means during that time the entire loan amount will be paid. That is compulsory payment that will be considered as a external liabilities. Are you got it? So here the partner's name is it is come to the bank account. Other than the partner, other than the working partner, any outsiders names they are given means during that time we have to consider that one as a liability. Whether they are given the name of a partner means that is not a liability, that will be considered to the partner's capital account only. So this is entry number 10. So these are the journal entries which we have to discuss in this chapter. So totally how many entries will be there? Totally 10 journal entries will be there. Out of these entries, they will ask 2 marks in the examination point of view. Any one entry they will be asked. So whether they will be asked the entry number 1, 2, 3, which is the steps, and also they have to ask the journal entries in the second concept, that is partners capital related journal entries only. So out of this we have to write any one journal entry along with narration. We have to write this one. So this is the entire theory concept here, which is going to be end. In the next video onwards, we have to move to the problematic manner. So here each and every problematic is very important, with a new different adjustment, with a new different solutions we have to done. So the previous chapters will be differ. This chapter is totally differ to the examination point of view only. So I think people have been understood all the journal entries. Even though if you are not getting the information by explaining this one, you can directly contact me. I will explain what the doubt you have to arise in this chapter only. Thank you everyone.